He wasn't born into wealth, no elite connections, no silver spoon, just a boy from Long Island with an insatiable hunger for success. At 12, he made his first stock trade. By 26, he was a rising star on Wall Street, until his arrogance got the best of him. A drunken punch to his boss's face cost him everything. But he wasn't the kind of man who stayed down. From a tiny apartment, he built a financial empire worth over $138 billion that dictates the flow of global wealth. He thrived on market crashes, making billions while economies collapsed.
10 years ago, Wall Street and Main Street were devastated by the 2008 financial crisis. Now, while many struggled, a few investors saw the crisis coming and were able to successfully navigate it. Ray Dalio, the founder of Bridgewater Associates, the world's largest and most successful hedge fund, was one of them.
He saw what others couldn't, positioning himself as one of the most powerful men in finance. Yet, with great power comes even greater controversy. His deep ties to China's Communist Party sparked global scrutiny. His relentless push for radical transparency turned his company into a corporate surveillance state. Now he warns of America's decline and China's rise, but is he a visionary revealing harsh truths, or a strategist shaping the world for his own gain? This isn't just a story of wealth. This is a story of power, control, and the unseen hands shaping the future. Raymond Thomas Dalio was born August 8, 1949, Long Island, New York. His father was a jazz musician who worked late into the night, and his mother was a loving and caring figure in his life. Despite growing up in a middle-class household, Dalio was ambitious from a young age. Unlike many of his peers, he disliked school, finding it full of memorization rather than real understanding. Instead of conforming, he sought his own path to success from as early as 8 years old. Determined to make money and gain independence, Dalio took on various small jobs, mowing lawns, shoveling snow, and most notably, working as a golf caddy. This job would end up changing his life forever.
I had odd jobs when I was growing up. I had a paper route, cut lawns, and did all that. And then I got into caddying when I was 12, and the markets were hot at the time. And I thought that, I want to take my caddying money and play the markets.
The golf course was a hub for Wall Street executives, and as he caddied for them, he absorbed conversations about the stock market. Fascinated, he decided to try investing himself.
And I was talking about stocks with the people that I was caddying with, and I took my caddying money and I decided I would invest. I didn't know what I was doing. First stock I bought was a company which was the only company I ever heard of that was selling for less than $5 a share. That was my criteria, because I figured I could buy more shares, and that meant if it went up, I would make more money. Obviously stupid. But I got lucky. The first company I bought was a company that was about to go broke, but somebody acquired it and it tripled. And I thought, this game is easy. So I got hooked.
At the age of 12, he used his savings from caddying to buy his first stock. His selection process was simple. He looked for the cheapest stock he could find, one priced under $5 per share. By sheer luck, the struggling company he invested in, Northeast Airlines, was acquired, and its stock price tripled. This early win gave Dalio a false sense of confidence, making him believe that investing was easy. But more importantly, it ignited a lifelong passion for the markets. By high school, Dalio had built a small stock portfolio worth several $1,000s. He pursued a finance degree at Long Island University, where he became increasingly interested in meditation, a practice he picked up after watching the Beatles travel to India to study under a yogi. Meditation became a lifelong habit, helping him stay calm and focused, even in the high-stress world of finance.
I do transcendental meditation. There are all sorts of different types of meditation that I think it has changed my life. It has been so powerful, and it's probably the biggest gift that I can give anybody.
After completing his undergraduate degree, Dalio pursued further education at Harvard Business School. During his summer break, he worked as a clerk at the New York Stock Exchange, experiencing the energy of Wall Street firsthand. That same summer, he witnessed one of the most pivotal moments in modern economic history. President Richard Nixon's decision in 1971 to take the USA off the gold standard.
I have directed the Secretary of the Treasury to take the action necessary to defend the dollar against the speculator.
While most people expected the market to crash, Dalio saw stocks soar as inflation took off. This moment was a turning point for him. He spent the entire summer studying economic cycles, learning how similar events had unfolded throughout history. Through this, Dalio developed his belief that the economy follows predictable patterns, which would later form the foundation of his investing strategy and the principles that made him one of the greatest hedge fund managers in history. Fresh out of Harvard Business School, Ray Dalio plunged headfirst into the high-stakes world of finance. He landed a job at Shearson Hayden Stone, a prestigious Wall Street investment bank, where he found himself surrounded by aggressive, hyper-competitive traders. Unlike many of his peers, Dalio didn't come from wealth or privilege. He had no elite connections, just an unrelenting drive to succeed. His knack for predicting stock and commodity movements quickly set him apart, earning him a reputation as a rising star. With each successful trade, his confidence grew, and so did his clientele. Dalio's bold personality sometimes led him astray. He paid a stripper to drop her cloak in front of the audience, leaving attendees stunned. Then, on Christmas Eve of 1974, a night of drinking with colleagues turned into a physical altercation. In a heated argument with his boss over who was the better trader, who had the faster car, or who had the more attractive wife, Dalio lost his temper and punched his boss square in the face. That was the end of his career at Shearson Hayden Stone. But Dalio didn't let this setback define him. On New Year's Day in 1975, he launched his own firm, Bridgewater Associates, from his two-bedroom Manhattan apartment. With no grand plan or wealthy backers, Dalio's initial business model was straightforward. He would study the financial markets and provide investment insights to clients. His deep understanding of commodities, interest rates, and currencies, skills honed during his time at Shearson, gave him a unique edge. Dalio built his reputation through relentless research and analysis. He started Daily Observations, a newsletter where he shared his economic insights. The report quickly gained traction, attracting top corporate executives, policymakers, and even central bankers. His insights weren't just accurate, they were accessible. One of his earliest and most significant clients was McDonald's. In the late 1970s, the fast food giant was expanding globally and needed a strategy to manage price fluctuations in its chicken supply. Dalio devised a hedging strategy that protected McDonald's from volatility, ensuring stable prices for its new Chicken McNuggets.
And I had a large chicken producer as a client, and I had McDonald's as a client, and McDonald's wanted to come out with the McNugget. But the problem with the McNugget is if the cost of the buying McNuggets varied a lot, they can put it on the menu, the price could go up a lot, and they'd have big losses, and then they'd either have to change the menu price, which would be a mess, or they would have to take these losses.
This early success wasn't just a win for Bridgewater. It was proof of Dalio's ability to apply economic theory to real-world business challenges. Despite these victories, Dalio never saw himself as a traditional hedge fund manager. That changed in 1985 when the World Bank took notice of his insights and handed him a $5 million test portfolio to manage. In 1991, Bridgewater introduced its first hedge fund, Pure Alpha, a pivotal moment in the firm's history. Unlike traditional investment strategies, Pure Alpha focused on generating returns independent of market fluctuations. It leveraged deep macroeconomic analysis to identify profitable opportunities across asset classes. The fund's name symbolized its goal, separating market-driven returns, beta, from informational advantages, alpha. This innovative approach would come to define Bridgewater's success, and cement its reputation as a leader in the hedge fund industry. By 1995, Bridgewater had expanded its influence further, managing global central bank reserves and solidifying its reputation as a macro investment powerhouse. These strategic moves positioned Bridgewater among the most trusted financial advisory firms, attracting some of the largest investment funds in the world. Additionally, sovereign wealth funds, such as the Government of Singapore Investment Corporation, GIC, relied on Bridgewater's expertise. Bridgewater also managed assets for major public pension funds, including CalPERS, California Public Employees Retirement System, and the Pennsylvania Public School Employees Retirement System. Prestigious university endowments, like those of Harvard University and Yale University, were also part of its client base. Furthermore, leading charitable foundations, such as the Ford Foundation and the Rockefeller Foundation, turned to Bridgewater for its innovative approach to macroeconomic investing. However, the prestige and strategies of Bridgewater were soon to be tested. The 1998 Russian financial crisis and the collapse of long-term capital management sent shockwaves through global markets.
A massive 6.5% interest rate hike by Russia's central bank has failed to halt the ruble's slide.
The ruble has lost 50% of its value this year.
It's August 1998 and Russians are lined up outside the banks.
While many hedge funds suffered devastating losses, Bridgewater's strategies were put to the test. By the early 2000s, Bridgewater Associates had firmly established itself as one of the most influential hedge funds in the world. But the next 2 decades would see the firm grow into something far greater, the largest hedge fund on the planet. Ray Dalio, once a scrappy outsider on Wall Street, had become one of the most sought-after economic thinkers of his time. His uncanny ability to decipher global macroeconomic trends, coupled with his innovative risk management strategies, solidified his reputation as a visionary investor. By 2006, his analysis had led him to a startling conclusion: a financial crisis was looming. Dalio positioned Bridgewater defensively, shifting investments into US Treasury bonds, gold, and the Japanese yen, assets that would hold their value in turbulent times. His warnings about the fragility of the US economy grew more urgent in 2007. He even met with government officials to caution them about the risks posed by mortgage-backed securities and the unsustainable levels of debt in the financial system. The 2008 financial crisis would become one of the most defining moments in Bridgewater's history.
10 years later, the great financial crisis of 2008 still casts a long shadow.
Remember those dark and frightening autumn days of 2008?
This is going to be one of the watershed days in financial markets history.
Let's talk about the speed with which we are watching this market deteriorate.
The Dow traders are standing there watching in amazement, and I don't blame them.
And a testament to Dalio's genius. While most hedge funds and investors suffered catastrophic losses, Dalio had seen the storm coming. For years, he had been sounding the alarm about the dangers of excessive debt. His insights, published in Bridgewater's Daily Observations, had accurately predicted the housing bubble's collapse and the ensuing market turmoil. When the crisis hit, Bridgewater's flagship fund, Pure Alpha, delivered a remarkable plus 9.5% return in 2008, a year when most of Wall Street was grappling with double-digit losses. As the crisis unfolded, governments and central banks turned to Dalio for guidance. His expertise on economic cycles, monetary policy, and financial stability made him a trusted advisor to institutions like the Federal Reserve, the International Monetary Fund, and global policymakers. Dalio's insights didn't just protect Bridgewater's clients, they helped shape the global response to one of the worst financial crises in history.
It's important to remember that this crisis didn't happen overnight, and it didn't result from any one action or decision. It took many years and many failures to lead us here, and it will take many months and many different solutions to lead us out.
While Bridgewater had already been a dominant force in Western financial markets, Ray Dalio saw massive potential in China. His fascination with the country dated back to his first visit in 1984, but by the 2010s, he was actively deepening ties with the Chinese financial system.
We go now from London to China, where that country's sovereign wealth fund is shifting its investments away from cash and into hedge funds and private equity firms.
By 2015, China had invested over $10 billion in Bridgewater. This financial relationship fueled criticism that Dalio was too close to the Chinese Communist Party, CCP, and that he was helping China rise at the expense of Western dominance. As Bridgewater cemented its foothold in China, it made history by becoming the first global alternative investment firm to be granted a domestic investment license by the Chinese government. This allowed Bridgewater to raise funds from local high-net-worth individuals and institutional investors. Bridgewater first set up an office in Shanghai's free trade zone in 2016, and within a few years, the firm obtained a wholly foreign-owned enterprise WFOE license, giving it official approval to operate in China's asset management sector. According to industry analysts, Bridgewater's success in obtaining this license was due in part to Dalio's long-standing relationships with Chinese regulators and his history of charitable giving in China. Unlike other American hedge funds that were betting against the Chinese economy, such as Jim Chanos, Bridgewater Associates, and Kyle Bass, Heyman Capital Management, who were shorting Chinese equities, Dalio took a contrarian approach. He dismissed fears of a financial collapse in China, stating that while the country had a debt issue, it was manageable because its debt was denominated in its own currency.
I think that China right now is at a juncture, and if I take the economic, the real problem is that the real estate debt problem and the local government debt problem has not been dealt with adequately yet.
In 2021, Ray Dalio released one of his most ambitious books, The Changing World Order, which examined the historical rise and fall of superpowers over the past 500 years. Dalio identified 3 key trends that he believed were shaping the shift in global influence. First, he argued that the United States was gradually losing its position as the world's leading superpower. He pointed to rising debt levels, internal division, and weakening economic growth as signs that the US was entering a phase of decline. Second, he contended that China was set to surpass the US in economic and political influence, crediting its long-term planning, investment in infrastructure. Lastly, Dalio warned that investors, businesses, and governments must prepare for major geopolitical and financial shifts in the coming decades. However, the book quickly became a lightning rod for controversy. Critics accused Dalio of pushing a pro-China narrative and undermining US strength, questioning whether his financial interests in China had biased his perspective. Given that Bridgewater had billions of dollars invested in Chinese markets, skeptics argued that Dalio's analysis wasn't just economic research. His frequent praise of China's governance and economic policies fueled speculation that he was downplaying the risks associated with China's authoritarian rule while predicting a decline for the US. As tensions between Washington and Beijing escalated, so did the scrutiny on Dalio's views. Some saw him as a brilliant thinker, revealing uncomfortable truths about the shifting world order, while others believed he was a billionaire protecting his financial interests in China. His book ignited debates across economic and political circles. By the time the 2020s arrived, Ray Dalio had cemented his legacy as one of the most successful hedge fund managers in history. Bridgewater Associates had grown into the largest hedge fund in the world, and Dalio had expanded his influence beyond investing into thought leadership. While Bridgewater had navigated previous financial crises successfully, the COVID-19 pandemic in 2020 proved to be a difficult test. The global economy went into turmoil as markets crashed, unemployment skyrocketed, and governments injected trillions of dollars into financial systems. However, unlike during the 2008 crisis, Dalio's models struggled to predict the extreme volatility caused by the pandemic. The Pure Alpha Fund lost over 20% in early 2020, marking one of the worst years in Bridgewater's history. Many investors pulled their money, questioning whether Dalio's approach could still adapt to modern financial disruptions. Meanwhile, Dalio remained active in the public sphere, warning about rising debt levels, inflation risks, and increasing global economic instability. In 2022, after nearly 5 decades of running Bridgewater, Dalio officially stepped down from his leadership role. His decision had been years in the making, as he gradually transitioned responsibilities to a new team of executives. He remained involved as an advisor. His departure marked the end of an era. The hedge fund he had started from his 2-bedroom apartment had become a $14 billion powerhouse. With Dalio stepping back, many wondered whether Bridgewater could sustain its dominance without his leadership. His radical transparency culture and unique investment philosophy had defined the firm for decades. While the future long-term performance of Bridgewater might be in question, one thing is certain: Ray Dalio's impact on global finance is undeniable. If you enjoyed this deep dive into the mind of Ray Dalio, don't forget to like, share, and subscribe for more captivating insights into the world of finance, power, and ambition.